Welcome to Private Equity Profits. Clifford Locks is a certified board of director, a trusted confidant to CEOs, C-level exec, and high-potential employees to help them clarify goals, unlock their potential, and create actionable strategic plans. Seth Greene is the nation's foremost authority on growing your portfolio companies with direct response marketing. He is the founder of the direct response marketing firm Market Domination LLC, and he is an 8-time best-selling author who has been interviewed on NBC, CBS, Forbes Inc., CBS Money Watch, and many more. Cliff and Seth interview top players in the financial sector, focusing on private equity firms, venture capital companies, and family offices, discussing developments and trends shaping the industry. These experts will share with you how they've grown their businesses and increased profit, and how you can too. And now, here's your host, Cliff Locks.
Hello, everybody, and welcome to another episode of the Private Equities Profits Podcast. I'm Cliff Locks, your host. Today, our guest is Peter Badger, has filled a number of roles in business before becoming a full-time investor in real estate and agriculture in the last 8 years. He recently has been named the Chief Strategy Officer at Farmfolio, which invests in a diverse selection of high-demand agricultural products in emerging markets. We're excited to have him on to talk about the opportunities and the upsides available from passive investments in agriculture and farmland. Peter, thank you so much for being here on the show today.
Thanks, Cliff. Pleasure to be here.
Your schooling was in technology and computer systems specifically. Tell us about your background and what led you to study computer systems.
Yeah, I think actually for me, I had an interesting childhood because I was in middle of England. I'm obviously an English accent here. And I went to school and it's weird. I came from a fairly, let's say, less affluent background. I started doing some engineering projects after school to stay out of my family home. Had a bit of success and my teacher started entering me into his competitions. And at the age of 14, 15, 16, I actually started to win some science and technology competitions, which, I think they're still around. I presume it's still around. Yeah. But I was the young engineer of Britain and various other things. And I actually was on a path to do accountancy. And I started winning a couple of these competitions. And actually Philips Research, Philips the electronics company, ended up won a competition, and part of that was sponsorship. And they sponsored me all the way through university. Philips research head, who was my mentor in the early ages, said he stole me from the grasp of accountancy. So we all end up on a path for weird reasons sometimes, and that was mine.
I'm excited you brought up mentorship. We all have that opportunity, our listeners, to reach out to the community of young people and invite them to participate with our businesses. It could be a summer job, it could be an internship during the year. These opportunities actually impact those young people extremely well, and you can actually be part of a legacy for that person. And you can see with your story, my story, there are individuals that were influenced our path. We got to thrive, and others believed in us, and you had early wins in your career, which was great. You're an entrepreneur. Can you tell us what motivated you to start your own business?
Yeah, I think 18 years in corporate. I had a great career, investment banking. I was, working at 4 incredible companies, but I was the kind of guy inside. I was kind of I call it, internal entrepreneur, because they start a new business in the bank and I'd be there to build technology and operations and systems and help them grow the business from scratch. I just kept moving around the world for 18 years and doing that for many different banks. And then it kind of dawned on me that I wasn't the guy who can run the business and the guy who can create the business. And that's when I was like, I was itching to do my own thing for the last decade of those 18 years. And one day, 2008, I found somebody who was like-minded, my co-founder, Stephen, and we went to Vegas for a conference. And a couple of beers later, we agreed to quit our banking jobs and start our own company. And so it takes courage, honestly. We both had young families. But I think it was the right time for us. We were, a little exhausted of corporate, building other people's dreams. We decided one day to just build our own dream together.
It was a successful venture, and you led it all the way to an acquisition. What were the challenges associated with founding your own company and making it successful, and how did you overcome those challenges?
Everybody's journey is absolutely unique. There are no two journeys the same. But I think one of the biggest things which you need to have is belief. And it's cultural, by the way. In Britain, people are a little more negative about what's possible. In America, it's more positive, which is why I moved to America in some ways, because there is a big support system. And there is still the belief that you can build something which hasn't been done before. For me, it's in the early stages. If you have the idea, you're absolutely clear on this thing needs to be done, and you feel you have a way to do it, then just bucket out all the naysayers, focus, and find people around you who also believe in that dream, that possibility, and together you can march forward. I think that's one of the biggest things, because you're going to need those people around you when you hit a hurdle or two, because you will. I mean, and I think the other piece I realized early on, I kept my startup secret for 2 years.
You're in stealth. Wow.
I mean, I didn't want to talk about it because I was frightened somebody else to steal the idea. And yet that is just a really bad way of building your company, because the chances of them actually acting on it, having your passion, being in the right position in their career or life to actually pursue this thing, it's never going to happen. And so I finally got a mentor. 2 years into the business, I was having problems raising venture capital, and the mentor turned around to me and said, he laughed at me when I said I was kind of in stealth. And then when he finished laughing, the guy's name was Charlie. He said, "Peter, I'm going to give you one piece of advice only, so as not to confuse you. You need to walk out of here and tell 20 people your idea in the next week." And I was like, "Why?" He said, "Just trust me. No one's going to steal it. Just trust me." And within a week, talking about it, the idea became better. I had really reasonable people who kind of gave me feedback and gave me different tangential ideas, and it changed the trajectory of the company. We hired our Series A 3 months after I started talking about my idea in public.
So you became more crystal clear on the business. The team came together. The funding opportunity, you spoke to people, because you need to speak to a multitude of individuals to get funding. Fortitude to stay focused.
Right.
It really helped you. One of the things I will ask periodically, do you have your goals written down on paper?
Yes.
I want to salute you.
I do. I believe that you need to kind of vision out where you're heading, have a clear trajectory in both life and career, frankly.
It's sage advice, right?
Yeah, and my friends think I'm a little bit sad because in my yearly kind of anniversary with my partner, we have a review. So we sit down for dinner and look back at the year and what worked well, what didn't well, and kind of do some goals for the next year. And so I think the same way we do corporate planning or business planning, you should do it in your personal life as well. I'm a big adherent to that.
Good investment in time.
Yeah.
Large dividends. What did you learn throughout your career that spurred you to become a full-time investor?
I think for me, I spent 18 years on Wall Street.
Okay.
So I drank the Kool-Aid. Okay. I was, stocks, bonds, 60-40 portfolio. And you kind of, in that environment, you are within the bubble. And then when I started my own company, I was exposed to a whole raft of entrepreneurs and people outside of that bubble. And I realized, as I went through my journey, I chatted to more founders in Silicon Valley, that actually everybody else was investing in businesses and real estate and agriculture. And it was a whole new world out there. And I think that's the problem. When you work on Wall Street, you end up buying into the whole Wall Street thing. Whereas in actual fact, I'm now the alternative assets guy, because my eyes have been, made wide open on this recent investing journey.
What attracted you to real estate and agriculture investing?
Advice again. Okay. So I got through to the end of my company acquisition. I was sat there. I've made some decent money in Silicon Valley. I was like, and I think the weird thing for me to live is that I think we spend so much time as entrepreneurs, right, creating the outcome and building the wealth, and we often don't spend the same amount of effort to actually retain and or grow that wealth that you've earned. Okay. We just move on to the next venture. We pass it off to some financial advisor and they put it in the stock market, and you cross your fingers it doesn't lose 40% in the next downturn. And so I think for me, I was like looking for a different way, because I'd been through the dot-com bust. I've been through the global financial crisis in 2008.
Right.
I was like, okay, now I've made some money. I've been this crazy 8-year journey, and I've made a bit of money. Okay, my friends in Silicon Valley, what do you do to retain and grow that wealth?
Mm-hmm.
And the amazing message was I had like a group who were just giving to the financial advisor, passively walking away from it. And then there's a small group who were heavily into real estate. And one guy summarized it and he said, Peter, he said, we make our money in public and private company stock.
Okay.
And when you've made that money, you divert it into real assets.
Excellent.
Like real estate, agriculture, and forestry products. That was my turning point.
It's an excellent suggestion.
And so I also, because I sold the company, it was a sub 50 million acquisition.
Congratulations.
And so it's not really published as to what the amount is when it's sub 50 million. But everybody assumed I made a bunch of money. I started getting these calls from like investment advisors and all the big banks, and they're saying, how can I help you invest your money? And I actually started interviewing people. And I found this small cohort of financial advisors who were managing the money in Silicon Valley. And you never quite know, but like one guy's like, yeah, I've got part of Mark Zuckerberg's portfolio. You can never verify this stuff. But when they tell you these things, you start to ask questions and learn and learn and learn and learn. And there was this one guy who claimed to be in the Zuckerberg camp. And he said, listen, what you need to understand is that high net worth individual family offices, they have between 14 and 22% of their wealth in agriculture and forestry products.
Excellent.
Because not only is it uncorrelated with everything else they own, it's theoretically inflation proof.
Okay.
And more importantly, it's intra-generational wealth building. Because you create a farm, plant a tree, produces crops in 5 years. Case of coconut, for instance, it'll produce harvest income for 60 to 80 years straight.
Tremendous.
So not just for their portfolio, their living, it's for their children and their heirs in the future.
So the legacy side of it.
That's right.
How'd you come to be part of Farmfolio?
I was traveling around the world looking for alternative assets to invest in. And I'd been through a lot of the US. I'd done single family, multifamily, mobile home parks. I've done a bunch of short-term rentals, and I started getting, fancy. Okay, let's get a beachside Airbnb. And I just kept going. And finally, I was looking for ag projects. And I bumped into Farmfolio in 2015, 7 years ago now. And they were just starting a private equity deal with a coconut farm. And I put 150 grand in and watched the team. And they planted 32,000 coconut trees.
Great.
We watched it grow. I mean, it's amazing because you come to any of these projects. I went down to Colombia when the pandemic ended and picked a coconut off one of our trees and drank the coconut water out of it. And it's very satisfying, 6-7 years later after the investment.
Tell us more about Farmfolio.
So it started by a gentleman called Dax Cook, and he actually started it because he was looking to invest in agricultural projects for his own wealth. Couldn't find much. I mean, as we know, there isn't a lot out there. Farms are owned by rich individuals, families, multi-generational, occasional large corporations, and REITs. But generally, it's very hard as an individual investor to get into farmland projects. So Dax started out, created the company. His vision was, think about this, 7 years ago, he wants everybody to have a Farmfolio as part of their portfolio.
Cool.
So, genius vision, cycled through some projects, coconuts, limes, teak forests. And over the time I kept investing in everything, going down to, Latin America to visit the projects twice a year. And I just became very close to the team. And so to me, it was an obvious transition to actually go into the company directly and help them scale and expand with my Silicon Valley background.
Boots on the ground. You've seen your assets, and you see them growing, and it's nice.
Yeah.
What makes Farmfolio stand out from other organizations that invest in agriculture?
I think from my perspective, I've learned a ton about agriculture and farmland in the past 8 years.
Okay.
And what I realized was that you can't really make money in North America and Europe. And that's because the land is expensive, the labor is expensive, it's dominated by large conglomerates, private landowners, etc. And so what's special about Farmfolio is they realized early on that there's an arbitrage opportunity between overseas agriculture, but selling those products into North American and European markets. So the key is find the crops that are in greatest demand in the supermarket, like you and me buy every day, every week, and then go and find those farms in Latin America, cheaper land, cheaper labor, amazing agricultural skills, by the way.
Fantastic.
And then it's the arbitrage along the supply chain. And that's what makes this work.
I'm glad you got a good model there that's consistent.
Yeah.
You know, what are the challenges and rewards for working in the emerging global markets? Can you share your thoughts on inflation? And now we have the Russian and Ukraine conflict on crop prices.
See, it's very hard to talk at a macro level because just like real estate, it's a certain asset in a certain block in a zip code. It's the same with agricultural products. I mean, the crop type, permanent versus row crop, the location, the supply chain aspects, the pests, diseases, the weather patterns, the ability to import, export. There's a whole raft per, let's call it, area of agriculture. So I can kind of talk to our experience. And in the past couple of years, I mean, so I kind of like taking my Farmfolio hat off for a second, put my personal investor hat on. I've got a deep portfolio across real estate and agricultural assets. And during the pandemic, my multifamily real estate has been amazing, full occupancy, people working from home, and the agricultural demand has shot up, fresh fruits, vegetables. And I think what I've realized is that when you look at what's a given in this world, it kind of brings you back down to that Maslow's hierarchy of needs. And so in the triangle at the bottom is food, shelter, water, security. And I'm right now, my portfolio during a terrible few years of pandemic, complete disruption everywhere, is that housing and food have been a bellwether during this period.
Very good. How does investing in these emerging markets democratize investments in our food system?
So I think from our perspective, I mean, we're already seeing, so kind of like, let's step back a second and talk about the trend in agriculture, and more importantly, in investing generally. Because what we're seeing is globalization has occurred. It's now hitting some headwinds, supply chains, we're seeing what's happening in the world at the moment. But more importantly, in the investing space, there's this whole financialization of everything. And so you want to, in the past, you couldn't own a major artwork. It was too expensive. But then Masterworks brought a bunch of people together. You could buy a portion of an artwork. And so the financialization or tokenization of all these assets occurring in every single asset class. And so I think from our perspective, our goal at Farmfolio is to, move this away from being agriculture and farmland being only available to the rich and wealthy. Let's go down the path of breaking up farms. Let's tokenize them, hopefully down to the tree one day, and give the average person the ability to get a portion of their portfolio into these assets in a way that makes sense passively. And I think that's really, the trend is the financialization of everything. And we're a major player in making that happen in agriculture.
Yeah, I see the DAOs at this point where those group of investors are actually making some of the strategic decisions and overseen by somebody that's an expert in the farming community. And at that point, you're making solid decisions. Some of Farmfolio's brands have become one of the top exporters. How has that been possible? And can you talk about the partnerships that have contributed to that?
Yes. I tell people when you're investing in agriculture, the farming matters, but the selling of the produce matters more. So we can all kind of bumble through farming with the right skills, the right experience, the right hired labor. But one of the hardest things to do is actually to negotiate with the retailers and wholesalers in the fruit markets, sales and distribution markets. And so from our perspective, Dax and the team, this has started 7 years ago. You basically have to open up those relationships and say, listen, take a container of lime, do a test. Were they high quality? Is it the right price? Was it all satisfactory for your consumers? Because it all starts at the market end. starts at what's the price, what's the demand, and opening up those fruit sales and distribution relationships are critical. And you just have to go down the journey, open up relationships, small tests, build a track record, regular delivery, high quality fruit, frequent basis, say what you're going to do and do what you said you do. And it takes years, frankly. And that's why when I see people investing in agriculture without that piece sorted out, be wary, because we can farm, but you've got to be able to do sales and distribution.
Excellent.
On the other end.
So the value, high-end value, is what are we going to get for the crop?
That's right.
Consistency, and then the volatility that sometimes takes place. But you're picking particular crops here, which don't look like they're going to have a challenge. Coconuts. I mean, some of the companies have gone public selling coconut water at some very high multiples. It's been very, very exciting to see what took place.
Yeah. So coconuts are classic. You need to understand the trends of the actual crop generally, and who's producing it and who's consuming it. You need to know those trends. And so one thing people don't realize about coconuts, which is fascinating, is that it's mostly been produced in Southeast Asia.
Okay.
But there's a major problem in the Southeast production nations right now, and that's called senility. And so in the same way human beings, trees are getting old. They're reaching 60, 80, 100 years old. Their production's dropping off. There's been no wholesale replacement of those trees. And so you're seeing some of the major coconut producing nations starting to have problems, which makes an opportunity for emerging countries to start filling that gap. So you need to look at those things macro level.
Excellent.
And micro down to the country.
Very insightful. Thank you for sharing that. Can you talk about the benefits of an accredited and non-accredited investors using a self-directed IRA or a 401k to add farmland to their portfolios?
So you have kind of two broad choices. Either if you're accredited, head down the private equity route. Okay. We actually sell something called farmland lots, and it's actually a real estate transaction.
Okay.
And so instead of buying a single family rental on a plot of land, you're actually buying, in the case of one of our farmland lots, 220 Tahiti lime trees, where the produce is already being sold at Walmart, Trader Joe's, Costco, Publix, etc.
Tremendous.
And so you're kind of just getting a harvest income minus farm expenses, payment on a frequent basis. And that's how we intend to democratize, is by giving people like you and me the ability to buy a piece of real estate that kind of acts just the same as a single family rental from a passive income perspective.
No tenants.
No tenants at all.
You got to harvest it.
Well, I've had an amazing lesson going through real estate in the past 8 years, because I had a single family home portfolio. You got to fix the air conditioners and the roofs, and you have a lot of stuff to fix over time. Went into multifamily. Oh, great, one roof instead of 25. Went to mobile home parks. Okay, now there's no building. It's just a concrete pad and utility connections. Finally, you end up in farming, which is there's no buildings at all. There's a hacienda for the farm management team. But yeah, you're right. It's trees, managing the crop, good farm management team, and it's so much straightforward if you choose the right crop in the right location with the right team.
You need a seasoned team like yourself to help make those decisions and oversee the investment, do it collaboratively.
Yeah. I mean, I tell people that in agriculture, in the same way that in regular real estate in the US, property manager will make or break your portfolio. The same in agriculture. The farm management team will make or break your farm portfolio. So that's why we go through and do detailed due diligence. We choose the best farming, multi-generational families.
Excellent.
They come along with the farms, and it's an amazing collaboration.
What do you consider to be the foundation for sound investments in real estate and agriculture?
The foundation for sound investing is probably following a due diligence process with lots of data to support it. If I had $1 for every time somebody recommended something to somebody and they decided to just invest, so I tell people, trust but verify. Yes, you're going to get the glossy marketing brochure. Yes, you're going to get the sales guy or girl who's going to kind of talk you through the asset. But actually, the process should be, if it's a new asset class, work out in advance the right questions to ask. Do your own research. What are the due diligence areas I need to worry about? Phrase the questions correctly, and then dig deep into that data as part of that process, that you are as informed as possible. I find that lazy investors don't do that work, often will lose their capital over those of us who do that due diligence process.
Look, I was happy to hear you down in South America and you're actually looking at the farms and the acreage at this point and the crops and talking to the team members that are actually part of that management team and those that are actually working in the field. So it's impressive.
I appreciate it. Got to do the hard work.
Right. That's due diligence. Is there anything I haven't touched on that you would like to add or expand on?
Yes, I would kind of like to talk about due diligence broadly.
Okay.
In the same way that I have a set of data sets that I look into US real estate. So for instance, when you're buying a single family, multifamily, whatever your commercial real estate asset class is, you can look for certain sets of data. So in the case of housing, it's population growth into the MSA, it's condo house values going up, it's declining crime rates, location to the jobs. There's a bunch of data sets you're going to analyze to make sure you're buying the right asset in the right location.
Excellent. There
is a corollary set of data for agriculture. And I'll give some examples. Climate, you need to make sure you depend on the crop, good rainfall, good sunshine.
Excellent.
Good soils, get the right altitude.
Okay.
You need to have the right crop type with demand that has longevity for transport logistics, make sure it can be imported. And so I have this set of data in agriculture, which you need to understand going into these kind of investments. And so what I will do is I will give people access to a landing page at the end, which I'll give my own personal due diligence matrix for people new to this asset class. Because it's really important that people get the education and get a real appreciation for it, like they would any other asset class they go into for the first time.
Thank you for sharing that with our listeners. How can our listeners contact you? And you suggest there's some links that you'd like to share with our listeners.
Yeah, so I think we will have a landing page. I'll put farmfolio.net. So that's farmfolio.net/private equity profits.
Okay.
And on that page, I'll kind of put some special links. We'll give the Farmland 101 brochure.
Okay.
It's 30 pages of condensed information about the asset class and what to look for. I'll put my own personal due diligence matrix on there. So you can kind of understand some of the data that I look at before getting in there. And anybody can feel free to write to me, peter@farmfolio.net. I'd be happy to engage and help you. It's all about mentoring, Cliff, as you know.
It is very
important. If I can pay forward what people have already paid forward to me in my career entrepreneurship, I'm happy to do that.
Yeah, before we started to record, we were talking about our listeners, they have children, and the idea of a mentor would be somebody like yourself, Peter, that you've had this long pedigree, investment banking, you've had an exit, you understand the IT extremely well, and you do your due diligence and the homework that's involved. So the ability to consider our listeners to ask one of your children, give them $1 million, give them $5 million, to go in and work side by side with you, Peter, and watch the process and be part of it. Because a lot of the children don't listen to the parents well, but they will listen to somebody that's, has been out there and has been very successful, and it's an outside individual. So that opportunity is something that our listeners should consider. And I think you'll find it to be very valuable. Many times that child will be different when they come back after they've had the investment has taken place. There's been some time, some dividends and payments are coming into the family at this. You're changing lives, and it's mentorship, and that's the magic. Peter, I want to thank you so much for being on the Private Equity Profits podcast. It's increasingly a global world. You provided valuable insight into investments out there that many may not have considered, and I appreciate it. I want to thank our listeners. I look forward to being back with you shortly for another episode of the Private Equity Profits podcast. This show has been produced by Market Domination, LLC.